Gold is attempting a breakout right now, and the last three times it did this, traders made big returns. Is history about to repeat? What is the setup and how do you trade it? Let's dive in. So let's start off by just sizing up the gold market. First off, I just want to show this chart here that just shows that we put in a high back on April 22nd near 3,500 and spent the last 90 days in the sideways consolidation, and we're now seeing a few of these breakout candles. But what I want to do is put a little bit of context, the fact that we've three times before seen this type of a consolidation. So I want to go back a little bit in history here, back to the low of October 2023, and after a bull advance back over here, the market proceeded to have this 3-month sideways horizontal consolidation that basically traded sideways and ultimately resolved itself with a bullish breakout. So now what I want to highlight here is after that bull breakout, gold proceeded to rally 21%. Okay. And then after that bull run, gold began another consolidation. This one as well, another horizontal triangle formation where it traded basically sideways during this consolidation before once again bullishly breaking out. This consolidation lasted 78 days. After that pause and consolidation in the markets, we basically saw gold once again break out for another bull run. In this case, it was again a 21% bull run on the upside over 125 days. Most of these bull runs last about 4 or 5 months. After that bull run came another consolidation. That was this horizontal triangle formation that happened in October of 2024 into January of this year. Now, this sideways consolidation after its peak lasted 76 days before once again bullishly breaking out, staying more or less each one of these consolidations at and then above its 50-day moving averages. Each of them held above all Fibonacci retracements, and then again another bull advance that ran 34%. So two 21% advances and one 34% advance. Each of them was prior to a 3-month sideways consolidation in these triangle formations. And here we are in, once again, a period where we spent 3 months, 90 days, trading in this sideways consolidation. If this was to bullishly break out, we are talking about 3,800 to 4,000, a number of measured moves, which lines up with about a 20% bull advance. So the puzzle to solve here, are we witnessing a bull breakout? Well, over the last several weeks, we talked about gold numerous times on this channel, and we were talking particularly about the sensitivity along this 50-day moving average and how critical it was for the bulls to hold the line, demonstrate that they are in charge of the primary trend, buy all dips, and keep it above those levels. And they have succeeded. In the last day, we have seen a bull breakout attempt out of a 1-month trade range. Basically, since the last week of June, we've traded in this little sideways trade range, and now bullishly breaking out of it. Now, we did not yet make 52-week highs, and it is only one day, and one day does not make a new trend, but this is how they begin, and this is why I want all of you to pay attention. Is this the beginning of the next bull run? So now what else do you want to know? Well, first of all, gold is definitely acting this way. The gold miners as well. Look at this breakout. First of all, the entire consolidation of the gold miners held the 50% retracement, held above its 50-day moving average, and is attempting to bull break out of this wedge formation on the upside. That's a move that measures out to $58 to $60 on the upside if it gets going. Now, so this is supported by the fact that silver held its little retracement last week, right back to 52-week highs, with clear targets up to $40, $41 on the upside. Same time, platinum is bull running. Palladium is bull running. Look at the way that platinum palladium plays like SBSW are trading. You have the stock go from $3 to $9 in just the last 3 months. These things are on fire. Bottom line is you've got a generally good backdrop in the precious metals market, and things are working. And so right now, this is an interesting thing to see whether gold gets things underway. Now, you could trade this by either A, just physically buying gold. You can A, buy the gold miners. We like to actually take concentrated high leveraged positions through the use of risk management using options. And this allows us to really concentrate our returns on the upside. Let's find out whether this is the big opportunity. We'll keep you all updated. Thanks, everyone.